gaps. Trader. That's right, team. We're here to talk about gaps. And what do we like? We like big gaps, and we cannot lie, but we don't want those gaps to overshadow our strategy. So let's go over these gaps, how I look at them. We've got some large gaps, so as we can see on these charts, PTN, we've got USDP, a large gap down there. And what I like about this is it offers a large risk to reward type of setup, which I love because as a trader, I want to give myself a more probable outcome, right? So as we're looking here, we've got a few different stocks to go over, but I want to go over one of these that is very near and dear to my heart, NBTX from Friday, guys. What a move that we had on this one. Check that out. What a beautiful move on the weekly candle. These are weekly candles we see here, weekly chart, and I'm going to break it down to a smaller time frame level. Let's go down to the 1 minute chart, and we can see that NBTX, this gray area is pre-market, blue area is aftermarket, middle is regular market session, right? Makes sense. Look at this move on NBTX all the way down here from a low of $1.75 all the way up to a high of $7.76 over here. That was huge. And the bulk of the move happened right here in the pre-market. Now at this time, it was around 5 a.m. Eastern time. And so that was pretty early. So I don't think a lot of traders were able to catch that move. And if you were able to, awesome. There's nothing wrong with that. But the problem here is that gap had already been filled, and we want to go over this. So let's get these levels on the chart. I know it looks like a mess, but we can really easily see after we mark these charts, where are the more probable or higher risk to reward type of gaps? Where are the gaps that we're looking to trade, right? So I'm not looking to trade this little gap. Why? Because it really doesn't offer that much of a risk to reward type of trade, right? So if I'm looking in here and I zoom in, we can see this gap from maybe from 465 to 473. If I hold shift here in trading view and hit, just click on the chart anywhere, you can see that's a 1% gap. Do I want to throw the kitchen sink at something that's only a 1% gap? No, I don't want to do that. So if I've got predetermined resistance levels on my chart, which I do every day, every one of these charts are added in to our Discord, into our marked charts channel. You guys have those levels before this move ever happens. And what does that do? It allows us to really assess this chart and say, where are those gaps where I want to possibly take trades? And we can easily see that this gap in the middle is that gap, right? But we filled the gap over here, and that's a major issue. But if I take the measuring tool, click on the left-hand side, click on the chart, and go ahead and measure this move out, that's a 27% gap. That's the type of gap that I'm looking for. Anything 10% or greater is really what I'm looking for on these gaps. Doesn't have to be that, but if I'm looking to throw the kitchen sink at something, I like to see a gap that's going to be 10% or greater. This is a 27% gap. That's huge, right? Now let's be realistic about that gap. Just because it's 27%, who really is going to get filled right at that 523 and filled exit right at that 669 area, right? Come on, let's be realistic about that. So let's be realistic and go ahead and shift. Let's get an entry here and an exit there, right? 20%. That's worth my time still. So it's a nice gap, as we can see. Even being realistic on the gap, it's still an attractive gap and something I may want to trade. So what I can do is I can choose, maybe I want to trade in this gap and I'm not too keen on this gap here. So what I can do is set my alert right here, just right click and set an alert. And guess what? Now I'll be notified before we enter that gap, which allows me to really assess the conditions going into it. Now, the issue we have here, guys, on NBTX is at 5 a.m. we had this massive move and we had this bullish vertical trend into a resistance. And we know we have a cluster of resistance above. So now we know that we've taken out some of these gaps, right? So the problem is later in the pre-market session, when we get into the chats, you see everyone's talking about NBTX and the gap that it has to fill. And they're right. It does have a really nice chart. I like this gap. I like big gaps, and I cannot lie. But I'll tell you, the issue here is the gap had already filled. Now, I don't think a lot of traders were able to get out of their position, but a lot of algorithms were exiting their position in this time. And I think that a lot of traders that were available and seeing these alerts were getting out as it was popping up into these bags. Because each one of these resistance levels that we're popping into, those are those bags from before, right? We're looking for those bags. And every time we close above those bags are exiting their position. New buyers are buying into those bags and creating a new support level. So old resistance now becomes new support, right? Makes sense. So the problem here is that we gapped up on very low volume. If I go over this candle, it was only 3,000 shares on this candle before the move. And the next move was 7,000 shares. So really it was just Joe Schmo and his mom trading this stock all the way into resistance, and they made themselves a boatload of money. I'm sure of it. Now, the problem is, guys, it's hard to trade anything like this with that low volume with any real size. So, of course, I'd be reserved if I was trading this type of move, and I would treat it like a risk it for the biscuit. But what we can see here is the levels held up. We hit our resistance of 669 and 672, and we never closed over. If I zoom in here, you can see we never closed over that predetermined resistance level. But we did on the next candle gap up and hit that next level, telling me that that gap right there had filled. And so the fact that this gap had already filled means it's less desirable to me. And the reason for that is if I'm looking for these bags to unload their position so that we can form a new area of support, well then, if we already gapped up to the next level, these bags had a chance to leave, exit out, and we're getting new buyers in here. So now it's going to become choppy until we clear above these new gaps and new levels. So because this gap already filled, I would be reserved, and I wouldn't throw the kitchen sink at this gap because we've already filled that gap. So I know these conditions are telling me a story and telling me, hey, yes, sure, maybe it's bullish getting into this gap here and it closed above, but no, this is not going to be bullish momentum and an A+ setup. Why? Because we've already filled the gap up to that 713 level, allowing those bag holders to exit their position. So it's going to be a little choppy there as we have new buyers that are not sure what's happening with the price action, right? So now we came back down, and when we see this cluster of resistance, you know, and I know this isn't a video about that, but when we have a cluster of resistance, then of course my level in chat would be close above the 758. Has to close above 758, hold that level, and continue its way up. And that's where I'd be possibly looking for trades as we filled the gap to 713. So I'm not too concerned with a close over 669. And a close over 713 has, of course, the 731 it already hit as a high, and it has a 750, 758 cluster of resistance above, right? So I want to see it close over. But we can easily see that this gap is the most attractive gap on that chart, right? Zoom on out in this gray area that's pre-market. This is the gap that everyone's eyeing, licking their chops and thinking, hey, that gap is worth my time. And you're right, it may be. But because we've already filled the gap before, it's not the first time. And the first time is always the best because, of course, that's going to be the first chance to get in, get green, and get out. Over here, we know that we have these major reds. We know that we have conditions that already reached these levels. So really, for bullish momentum, it's not bullish until it closes over this cluster of resistance. So until then, it's more of a risk it for the biscuit. And a lot of traders will come in and say, hey, you know, I traded confirmation. It closed over this level. Why didn't it hold? Well, there's a lot of reasons why these levels won't hold, but one of the greatest reasons of why this level won't hold is because it's no longer a true confirmation because we've already filled the gaps above. And being a key breakout trader that trades around these key levels, and again, these are those bags, we're looking for those bags, let's close above those bags. And the idea and theory behind confirmation, of course, is close above 523. It's got to hold that level to get up to the next target of 669. Now, I wouldn't just be holding out, just assuming I'm going to get to that 669. I would, of course, take profit on the way up to protect myself in the trade in case it starts to go against me. Because, of course, these are unpredictable low float stocks. And so the best thing we can do is trade our strategy and be disciplined, right? Discipline is going to be the key to consistency, and consistency is the key to longevity, right? All right. So move on over to regular session. We got to close over 523. What do we do? Well, it's not exactly bullish because we've got that bullish vertical trend. So we know that we have a red flag there. We also know that that gap had already filled above. So maybe, again, don't throw the kitchen sink at these type of trades, right? A little risk it for the biscuit lotto makes sense. But if you're throwing a kitchen sink at these type of confirmations, you can get yourself in some real trouble, right? So closed above, well, closed back below. That's our sign. Hey, didn't hold the level. It's got to hold. But guess what? We are hitting that 550 level right there, 550. So that's that $0.50 resistance and $0.50 target. So now really to deem this as bullish, we want to see it close over $5.50. And as we can see, none of these candles did that. We can see we had this nasty knife above the level, and we can see that this was pretty choppy. And that's to be expected as we've already filled the gap above on the left-hand side. So if I zoom in here again, a large wick hit the 550, did not close above 550. This is about where 550 is here. Did not close above, right? So did not confirm that level, and we need to see that for continuation. Over here, put the 550 level again right there, and guess what? Whoa, we got ourselves this big old bullish candle closing over 550, and sure enough, held above, ran to the next target level, and hit minutes later. So I'm not saying throw the kitchen sink at this. What I'm saying is, obviously, because we've already filled these gaps, it's going to be a little less probable than it would have been on the first time. So what we're looking for is clean, healthy, large gaps that have not been tested before. Now, if they've been tested before, the way I look at it is I have to greatly reduce my size and tighten up my stop loss to reduce the risk, because I know it's a higher risk and less probability type of trade because of the conditions previous. So if you really assess the conditions before these type of trades, you can get the sense of, is it going to hold up? Is it going to have those nasty knives? Should I throw the kitchen sink at it, or maybe just throw a bathroom sink at it, or maybe just something else, right? So NBTX grinded up, hit target, and guess what? Never closed over our 758. And so therefore, we never deem this as bullish again. We want to see it close over 758. Now, what's so great about bullish momentum and confirmation trading is that because we're looking for a predetermined level for it to be bullish, well, we don't have to stay glued and locked into this chart. So a lot of traders will sit there all day long and say, hey, NBTX is going to get over that 758. I can feel it. Well, you're sitting there all day long waiting for it. Now, if it gets over that level, great. All you have to do is set an alert. Just right click in Trading View, add alert, and voila. You've got yourself an alert before the level. And that's a major tip right there. If you want to be prepared and make sure that you're not flustered in the trade beforehand, and you want to give yourself a little time to assess these conditions, like this gap up before you get into your trade, set your alerts before the level. So yes, I want to get in at 758, but no, that's not where I'd set my alert. I'd set it below the level to give myself time to prepare and really assess the conditions before to tell me what kind of size do I want to throw at this and where do I want to put that stop loss to protect myself. Now, this is NBTX. We can see that worked out on this one. Yes, it had that massive move. It was a risk it for the biscuit. Anyone who got that, awesome. There's nothing wrong with that. The only issue with these type of trades is, unfortunately, they're not as consistent or consistently profitable, in my experience, as the true confirmation. So the first time we close over a level, that's what I want to see. That's where I love taking my trades. So if NBTX gets over that 758, my eyes will be watching because, of course, I have alerts set in the gap below. So that's NBTX. Next one I want to go over is SNGX. We like big gaps. We cannot lie. And SNGX had one of those big gaps. We can see over here. If I scroll into, let's see, Thursday the 4th. Let's see what we have. SNGX, we did really well with this one, guys. This was a nice winner for us. Now, had a huge move, and look at all those green candles. If that's not a bullish vertical trend, I don't even know what is. And sure, it closed over, and yes, it's bullish, but no, it's not A+. Why? Because we had that bullish vertical trend. Now, of course, this video is not about that. It's about these gaps. So after I measure these gaps and look at these levels, what are we looking for? We're looking for clean, healthy gaps that are going to give us a nice risk to reward ratio, right? So we know that this little gap in here maybe isn't that tradable, right? But maybe this gap is a little bit more enticing, because if we hold shift in Trading View and click on the chart, give ourselves a realistic area, give ourselves about 10, 11% on that move. Yeah, that might be worth my time. And this one above, we all know this is that most attractive looking gap on that chart, right? Let's go ahead and measure it out. So if I got right in there and right out there, of course, I was Houdini and just knew exactly where it was going to go, it would be 36%. Now, let's be realistic on it, right? Let's be realistic, guys. If we got in here and we scaled out there 26%, yes. Is that worth my time as a trader? You better believe it is. But I'll tell you what, it doesn't mean that I'm assume that it's going to get up to that level, right? We can't just assume it's going to get up to that level. So I will be scaling out and taking profit into it. Now, the way I treated this one, guys, got in this candle that closed above. Big old bullish candle, closed over that 427 level, right? Beautiful move. Came back down, retraced. Now, there's a few different ways to go about this on ticker SNGX. Me, myself, I took a smaller size because I knew I assessed the risk and knew that it was great risk getting into this type of move because it could have had a pullback after this bullish vertical trend. But I also knew I didn't want to miss out on this gap, so I took myself a smaller trade that I was willing to risk it for the biscuit down to this level. Now, as it pulled back, I could have doubled my position, tripled. I could have pulled back with it. but I didn't. I decided to hold out my position. As it pulled back up, I took my profit into the profit zones above. Now, there's a different way to go about this, all different ways. And it comes down to what you're comfortable with. But SNGX closed above because it closed so bullish above, and let's measure that move. If you're looking for this level to hold and it got up here, it's up 10%. You're going to have to bear a 10% loss if you're holding into this dip. Right? So we could buy, maybe if we're looking to, for an example, do a 5,000 share order, maybe we could do it in 5,000 shares, 2,500 shares here and 2,500 shares on a pullback. Or maybe you just break it up into thirds and do it that way, or even into fourths. Right? So you can do that any way that's going to be more comfortable for you. You can do that. Or if it's just not going to fit your risk profile, sit out. There's nothing wrong with that. Right? But that's a few different ways you can go about that in these big old gaps. Now, I knew that if SNGX got above into the next gap above $6, that we had a nice gap from 6 all the way to 7.16 with the half and whole in between, right? So I want to take part in that gap, but I also know that I don't want to waste my time watching this chart all day long because of things like this right here. So how do I avoid being glued to this chart and just wondering, when is SNGX going to pop up? Well, you set your alerts at the levels that are going to favor you as a trader, and that's what you're waiting for. And if you get those alerts, then you come in here, assess those conditions beforehand, assess the gap above, and really get a feel for what kind of size, if you want to take a stop loss, or where do you want to put your stop loss as well. And you can really get a sense of if you want to take the trade or if you just want to avoid it altogether, right? And that's how you do that. So that's one way of assessing these gaps. And guys, as you know, I'm a gap trader. I'm a breakout trader. I'm a key gap trader. I look for these key breakout levels to close above and then hold that level. And again, the theory behind confirmation is if I think this is going to $7.16, my resistance and target above, then it has to close over this resistance first, right? And if it can't do that, well, I can't believe in it. And I know I have an opinion, guys. You know, I get it all the time. Members will come in and say, hey, you know, where do you think SNGX is going today? And I wish I had the answer for that, and I don't. So what I do is I just set my alerts and I hope for the best, but prepare for the worst. Now, I prepare for the worst by getting out as soon as possible, but I get back in if it gets above my predetermined levels. Now, I have all of these levels marked in our chat, and I try to add about 100% or so of a move above from the current price. But as you can see, I have these levels marked out. So in case it really gets cooking, I'm ready to go with predetermined resistance levels. And I can really assess which one of these gaps are going to favor me as the trader, right? Because some of these gaps are going to be smaller than others, and some of these gaps are going to be more attractive and possibly worth my time when trading. So guys, that's it. I like big gaps. I cannot lie, but I will not let these big gaps overshadow the strategy. If we've already tested that level, if we've already filled the gap, the probability of entering and filling that gap again on a clean move is a lot less in my experience. So I hope that helped. If you found any value, thumbs up, and I'll see you in the next video. Thanks, guys.